In this video, we are going to discuss bearish triple candle patterns. The bearish triple candle pattern includes evening doji star, 3 black crows, bearish engulfing sandwich, bearish abandoned baby, evening star, falling 3. The evening doji star is a triple candlestick pattern that you can find at the end of an uptrend. It has 3 characteristics. The first candle is a bullish candle. The second candle is a doji candle formed above the first candle. The third candle is a bearish candlestick that closes below the midpoint of the first candle's body. The evening doji star signals a bearish reversal. The 3 black crows pattern is formed when 3 long bearish candles follow an uptrend, signaling a bearish reversal has occurred. This type of triple candlestick pattern is considered a bearish signal, especially when it occurs after an extended uptrend. For the 3 black crows pattern to be considered valid, the second candlestick should be bigger than the first candle's body. The third candlestick should be at least the same size as the second candle and have a small or no shadow. The bearish engulfing sandwich is a rare candlestick pattern. The first candlestick in the formation is a long bullish candle. The second candle is a long bearish candle that closes above the first candle open. The third candlestick is a bullish candle that completely engulfs the second candlestick and has the same opening price as the first candlestick. The bearish engulfing sandwich signals a bearish reversal. A bearish abandoned baby is a reversal Japanese candlestick pattern that is formed by 3 candles. The first candle in the formation is a large bullish candle. The second candle is a doji that gaps above the opening of the first bullish candle. The third candle is a bearish candle that opens below the doji. The bearish abandoned baby is a bearish reversal signal. The evening star is a 3 candlestick pattern signifying a potential top. It warns of weakness in an uptrend that could potentially lead to a bearish reversal. The evening star consists of 3 candles. The first candle in the formation is a large bullish candle. The second candle is a short candle that gaps above the close of the first bullish candle. The third candle is a bearish candle that closes below the midpoint of the first candle. This third candle confirms that a potential bearish reversal will occur. The falling 3 pattern is a bearish continuation pattern that appears in a downtrend. This Japanese candlestick pattern consists of at least 5 candlesticks but may include more. A long bearish candle is followed by 3 weak small body bullish candles, each fully contained within the range of the first candle body. The 5th candle is a long bearish candle that closes below the first candle close. The falling 3 pattern signals a bearish continuation.